right, today we are cracking open the playbook of an absolute global giant, Nike. We're going to deconstruct their business model piece by piece to really get why they're making this massive and honestly pretty risky strategic pivot for 2025. Let's just dive right in.
So, this is the central mystery we're unpacking here. Why would Nike, a company that is obsessed with winning, intentionally slam on the brakes? I mean, we're talking about them accepting lower revenue and profits on purpose? It feels completely backwards, right? But by the end of this breakdown, I promise the logic is going to be crystal clear.
So let's kick things off with the big picture. We're calling this Nike's big gamble. And that's exactly what it is. It's a calculated move to take some real immediate pain, all for what they're betting is going to be a much, much bigger long-term gain.
And you gotta listen to the official language here. This slowdown, it's not an accident, it's not a bad quarter. Management is explicitly taking a financial hit, and their goal to, quote, reignite brand momentum. That one phrase tells you everything. Their focus isn't just on the numbers. It's about getting the power and the cool factor of the brand back on top.
Okay, so to really get their strategy, we've got to pop the hood and see how this Nike money machine actually works. What are the core parts that make this multi-billion-dollar giant tick?
And here it is, the first critical piece of the whole puzzle. Just look at this breakdown. At 67% of revenue, footwear isn't just a product for Nike, it is the product. The entire company is basically an engine built around selling shoes. Sure, apparel is a big chunk, but you have to understand, for Nike, everything starts and ends with what's on your feet. So how do they sell all this stuff? Well, it's mostly two ways. You've got Nike Direct, that's their own stores and websites, which is huge, almost $19 billion. But then, look at that bigger bar, wholesale. We're talking sales to partners like Foot Locker. It just goes to show you, even with this massive push to sell directly to us, Nike still fundamentally relies on its classic retail partners. And of course, this is a global beast of a company. But what's really interesting here is that their home turf, North America, is still the absolute powerhouse. It makes up over 40% of total sales. That means whatever happens in the US market sends these massive ripple effects across the entire company. Now let's talk about costs, and this is a really crucial distinction. On one side, you have their manufacturing, which is a variable cost. See, they use contractors, so it's kind of like a pay-as-you-go plan. The more shoes they make, the more they pay. But on the other side, their own Nike Direct stores are a huge fixed cost. Think of it like a monthly subscription. The rent, the staff, the lights, that bill comes in every single month, whether they sell one pair of shoes or a million. Okay, so we've seen how the machine is bolted together. Now let's step back and analyze it. What makes Nike this impenetrable fortress, and where are the cracks starting to show up in the armor? This is straight from their official legal filings, and it says it all. At the very heart of the Nike Fortress is the brand. Not the factories, not the stores, the swoosh itself. The company literally sees this intangible idea as one of its most valuable assets, right up there with cash and buildings. It is the foundation of everything they do. And that brand, it's the cornerstone of what we call their economic moat. The defenses that keep competitors at bay. It's backed by a global scale that smaller companies just can't touch, those legendary relationships with athletes, think Michael Jordan, and a supply chain that wraps around the entire planet. This combo is why Nike has been on top for so long. But, no fortress is perfect. Nike is in a constant dogfight with intense competition from brands like Adidas and these newer players like On. They live in constant fear of missing the next big thing in fashion. And notice that third point? That's the one that keeps the executives up at night. Damage to the brand's reputation. If that core asset gets tarnished, the whole thing could be at risk. And here is a shockingly specific vulnerability. For their most important product, footwear, nearly 60% of it comes from just 4 manufacturing partners. I mean, think about that level of concentration. What happens if something goes wrong with just one of those partners? It could trigger a massive, massive disruption for the entire company. All right, now it's time to put all the pieces back together. We've seen the business model, we've seen the incredible strengths, and we've seen the hidden weaknesses. So now, finally, we can understand the logic behind this deliberate slowdown. Let's assemble the master plan. And here's the bottom line. This whole strategy is a defensive play. Nike looked at the risks: stale products, a market flooded with their own discounted shoes, and damage to the brand's premium feel, and they decided it was time to clean house. They're doing all this to protect the one asset that matters more than anything else, the brand. And they're not just winging it. They have a clear 3-step plan. Step 1. Refresh the product. That means getting all the old discounted sneakers out of the market to make room for new, exciting, full-price stuff. Step 2. Rebalance the marketplace. That's about helping their wholesale partners clear out old inventory so Nike feels like a premium brand again. And 3. Amplify the brand, basically cranking up the marketing spend around big events and new launches. And this slide right here, this gets to the absolute core of the strategy. It is a trade-off, plain and simple. Nike is willingly taking a hit to its wallet right now, selling less stuff and making less profit on each sale because they believe it's the price they have to pay to get the brand healthy again. It's all about setting themselves up for more profitable growth down the road. So we end up right back where we started, but now it all makes a lot more sense, right? Nike is placing a huge bet. They're trading today's guaranteed results for the future health of their brand. The big question for all of us is, will this painful, deliberate pivot go down in history as just another legendary, strategic win for the biggest name in sports? Well, only time is going to tell.